Each trading day at 11 a.m., the Chicago Mercantile Exchange, or CME, hosts 10 minutes of electronic trading of these blocks of wholesale American-made cheddar cheese. Like some other food products, the last couple years of cheddar trading have seen some wild sessions. For example, here's a drop that analysts attribute to the first coronavirus lockdowns, when schools and restaurants started closing and halting purchases. But during these swings on the CME, the price of cheese here, at the supermarket, held pretty stable. In fact, if you chart it out, the price consumers pay for cheese has stayed more steady than some other common foods. Here's the change for ground beef, and eggs, and apples. And here's cheese. There has been some inflation, but the swings you see on the CME are largely absent. With the price of many foods on the rise right now, we wanted to better understand why, even with the choppy wholesale prices, has the price of much of the cheese we buy at the store stayed pretty stable. The wild swings in wholesale cheese prices play out on the CME's auction platform. Traders buy and sell those 40-pound blocks and 500-pound barrels of cheddar. The blocks are sliced and shredded and sold to grocery stores, restaurants, and others. And the barrels are primarily turned into processed cheese products. These are the only cheeses traded on commodity markets. And cheese sellers all over the country watch the prices, especially of the blocks.
Okay, so I make Swiss cheese. There's no spot market for Swiss cheese. There's no futures market for Swiss cheese. But can I use the insight I got on cheddar pricing to say something about what Swiss is worth?
To better understand the wholesale swings, we spoke to Andrew Novakovich, an agricultural economist who's been studying these markets for over 40 years.
If I think, for example, Swiss should always be worth more than cheddar, at least a little bit. If the price of cheddar goes up, well, maybe the price of Swiss that I charge should go up.
So, when the price of cheddar swings, like it did in 2020, so does the wholesale price of other cheeses. Again, here's where bulk orders dried up early last year. And around here, the government started the Farmers to Family Food Box program to help farmers weather the storm. It included a promise to buy $100 million a month in dairy products, including cheese.
All right, thank you. Have a good day. Thank you.
There were several different types of baskets that they authorized. There was a dairy basket and a milk basket, and they paid to acquire those products, put them in a paper bag or a cardboard box, give them to local food distribution centers. We saw the price of cheese absolutely explode for a short period of time because there was this requirement to get this huge volume of cheese in a very narrow window.
After a few months of shocks, prices returned to a bit lower than what they were right before the pandemic. As these programs ran their course, influencing more sharp swings, customers were picking up vast quantities of cheese at stores. Which brings us to the question at hand. Why, on average, are these swings hard to notice in the dairy aisle? Novakovich attributes it, in part, to something called price smoothing.
When prices are increasing rapidly for some reason, grocery stores tend to say, we don't want to reflect all of that. They anticipate being able to recoup that margin at some point when prices recede. So instead of seeing quite the same roller coaster at the retail level, generally consumers see a much smoother effect.
Novakovich says customer expectations can also influence pricing strategies. Take apples. Because they're grown seasonally, customers may expect them to go up and down throughout the year more than something like cheese. Also, cheese is perishable. Customers may buy it more frequently than other foods, and would be more likely to notice price changes, another incentive for grocers to keep prices stable. While some in the cheese business have had to weather big market swings, a smaller section of the industry has managed to bypass much of the storm. Aaron Weiswell, who owns an artisanal creamery, told us that while the CME was swinging in 2020, his business was thriving.
2020 was one of our best years because of farm markets and direct sales. The public did not want to go to retail stores.
Producing their own milk and selling direct to consumers allows some artisans to skip the wild wholesale markets.
We are basically a farmstead creamery, which means we make most of our own milk on site. We age our cheeses in a cave on site. and we are regional.
Wisewell said that while he's protected from some market conditions, 2021 has still presented challenges.
21 is rough because of labor. We're producing and selling everything we make. But fewer of us are working longer hours to make the same stuff because we can't find enough people to make it.
Wisewell said that while he's managed to hold steady on prices so far, he's feeling this year's supply chain pressures like much of the rest of the economy.
The way we are doing it is sometimes increasing the minimum that the customer has to buy from us, changing delivery minimum, increasing delivery prices, trying to hold on. I don't know how long we can hold on. If it continues the way it's continuing, it's going to have to get a boost. But we don't like to increase prices. And we haven't probably in cheese for almost 5 years.
As the economy continues to see supply and production challenges, the price of cheese, on commodity markets and in the store, remains uncertain.